Let's bring in Michelle Connell now, CFA and owner of Portia Capital Management. Michelle, good to see you here. So are you still believing in the reopening trade? I mean, now that we see more of our economy reopening here in New York City, the mayor saying we're going to reopen on July 1. Is that trade still happening, or has it already peaked?
I think it depends on what areas of the economy you're talking about, and also specific names or stocks, to be honest with you. So to a degree, we've had this great inflow of people, institutions and retail buying stocks, but a lot of what has been bought is the lower quality, low cash flow names and less emphasis on the quality names.
Well, let's elaborate on that. So what sectors are you most concerned about?
I'm concerned by the sectors that have any dependency on semiconductors or chips. You spoke with your last guest about that. You're seeing names like Ford and BMW that are being affected. I believe Caterpillar came out and said the same thing when their earnings were reported. And you probably are going to see some areas of hardware that are affected by the shortages of semiconductors. You also will have some areas, sectors that are affected by the costs of labor as they're going up, because people, as we know, or small businesses are having trouble finding workers at this point. So they're having to go up and bid up their wages. So I think there's going to be some pressure there as well.
What about in terms of some of the overlooked or unloved sectors of this economy? I'm thinking maybe the small caps. Are you showing that sector any love right now, Michelle?
You know, I kind of like SMID, which is a combination of small and mid-cap stocks. A lot of small cap stocks have been bought up. Again, more emphasis has been placed on those that are lower quality and lower cash flow. So I'd be looking at the names in the Russell 2000 that have strong cash flow and are quality names. And I would even go a little bit higher in the cap structure and look at mid cap, because your average multiple there is lower than it is for the Russell 2000 names.
And what would you say in terms of investors who are worried that we're in a bubble right now? What do you tell clients in terms of navigating this kind of an environment?
You know, everybody's talking about sell in May, go away. And I'm saying, I'm kind of caveating that with sell a bit in May and go away. So look at the names that have run a lot in your portfolio and may be a little bit frothy here, a term that even Chairman Powell used a few days ago. Take some money off the table. Look at some names and sectors that are a little bit more enticing here, especially on the long-term basis. There still are names in technology and healthcare that look really attractive here.
What are you doing with the bond market? I mean, we saw yields sort of move up really, really fast at the beginning of the year. Then things started to stabilize. What's your outlook for the 10-year Treasury yield, and how much exposure do you have to Treasuries at the moment?
I frankly don't have a lot of exposure to treasuries here. What I've been doing is a barbell. So I either have things in a money market, or I'm using a hybrid private credit, some of the interval funds that are attached to floating rate securities. So you're able to get a better yield. And at the same time, you don't have to worry about the interest rate or credit risk, especially if you're looking at some strong credits within those funds.
And what individual stocks do you like right now? I know Amazon is one of them, but give us a couple more.
Yes, I do like Amazon. I think we're probably going to be looking at a split here, fingers crossed. I also like MedPlace, which is in the healthcare arena. I like Vino, which is a software company, cloud-based. And I also like Repligen, which focuses on efficacy or creating technologies that help efficacy be for the biotechs and for the pharma companies.
All right, we're going to leave it there. Michelle Connell, CFA and owner of Portia Capital Management. Thanks so much for your insights today.